Hello, this is Alex Eddles from Axfaco giving you our quarterly update on blockchain and fintech. What I'm going to do in this 10-minute video is take you through the updates covering three areas. Firstly, general updates around blockchain, ICOs, cryptos. What are the major investments taking place, things we think you should be aware of? What are the new developments, particularly looking at new technologies around the blockchain based platform. We'll then look at the regulatory update. The regulators have not been sitting still. We'll look at some international approaches, particularly the Bank of Settlements International. They've been doing some work we're going to make you aware of. We're going to look at the American and Canadian approach and some developments, particularly around the activities of the SEC. And then we're going to come into Europe and touch on where the European regulators are. Finally, what we're going to do is go on to data science and artificial intelligence, particularly. There's some triggers there for action which we want to make you aware of, and keep you abreast of some developments there. Now, in general, things that we'd like to draw your attention to in the blockchain space particularly is the investments that are coming into this area and some new developments that we think are quite exciting. There's a growing investment flow via the ICOs to blockchain applications and to blockchain platforms, where last year we had about 1.4 billion euros invested. This year, the first quarter alone, 4.7 billion euros invested in blockchain related initiatives, and that's either tokens, ICOs or blockchain platforms raising money. So a lot of money flowing into blockchain and a lot being invested. Noteworthy examples, Telegram raising 1.7 billion. Very interested to see how they're going to make that investment and get a return on that. And EOS, a new platform, $4.1 billion raised. They've got a huge amount of resource now which they can deploy to this new technology. Exciting new platform, one certainly to watch for the future. Had a little bit of a hiccup now with locking some accounts, which raises questions around governance on the platform and a distributed platform. But EOS is certainly a technology to watch out for. We also see on the positive side the shift towards proof of stake. Proof of work has been the mechanism that launched the Bitcoin. It's been adopted by other blockchain platforms, Ethereum in particular. But the energy consumption is a problem here. It's an effective mechanism, but it's extremely inefficient in computing power usage and therefore power usage. But now Ethereum's already got the software ready for proof of stake. If the community agrees to shift onto that, that would make a major reduction in energy consumption, and that I think is a path forward for that technology, and it will alleviate the issues, justifiable issues on energy usage. The other issue that's interesting to watch is Plasma. Plasma is intending to provide a technology sitting on top of the blockchain base layer which enables faster transactions, more transactions without taxing the main network. But keeping the administration in the main network. So exciting technology in terms of scaling and addressing the scaling issue. Last thing I would say, crypto markets did fall, but seem to hit base levels of support around the $6,000 of Bitcoin and the 500 at Ether. And there's some confidence there in these platforms. I wouldn't try to predict the future though. Moving on to the regulatory update. The BIS has received, that's the Bank of International Settlements, standard body in the banking industry. They've done some work. They've issued a couple of reports, one in April, one in June, looking at cryptos and ICOs and the future of money. Their core message, making a long story short, is they're saying cryptos are not money, i.e. they don't fit the traditional definition of money in a technical sense. But that's the same as saying, Airbnb is not a hotel. No, it's not a hotel, but it is a hotel service. So what they've done is raise some concerns around the use of cryptos, but also set some paths out for the future. They've raised concerns around scalability. The transaction modeling they're doing is sort of taking the current technology and linearly projecting that forward. We would say let's look at some of the new technologies that are going to happen in the next 2 years, and you need to base your projections on those technologies, and therefore the picture will change. But the certain point is lack of maturity on the technologies, particularly around the exchanges and the wallets, and they're pointing towards regulation for exchanges to protect consumers, and also some sort of standards around the wallets, because that's the source of the hacks. and they're so major, damaging consumer confidence and damaging confidence. Perhaps the regulator would want to make a move there, but also very keen to ensure that anti-money laundering, anti-terrorist, anti-drug money measures are implemented in the exchanges and in the parties who are involved in blockchain solutions, services, and particularly the ICOs, that they are not being sold as equities or misrepresented to consumers. They point to a very significant problem, and it's that the blockchain is a technology. It's not a legal entity, it's not a company, it's not registered as a company, and no single person is responsible for it. So our current legislation, which is really looking at who is accountable, a person or a company, is struggling with this nature of, or has struggled with the nature of a technology, which is outside the legal domicile of our current laws. What they're saying is perhaps we should redraw the boundaries of the regulatory perimeters and include technologies. I think that's a major step in regulation, one that we really need to watch. People in compliance, legal, risk really need to watch what takes place there, and they're hinting at regulating the exchanges and targeting the wallets. Will the banks issue crypto fiat currency? Not yet. They're monitoring the situation, reviewing it. A couple of countries, Sweden, Canada, Singapore, have got some interesting pilots here, but it's still steady as she goes. So we might see some applications with a limited scope, but the central banks are not yet confident enough, I think justifiably, in the maturity of the technology to go forward rapidly. Looking at some of the other regions, America, the SEC has issued subpoenas to a lot of ICOs, particularly driven by the need to protect consumer interest, to make sure that the information that's being provided about the ICOs is complete and fair, and that consumers are not being misled, and particularly they are applying what's called the Howey test to the tokens to see if these qualify as equities, and also to see if you're selling them to people who are not accredited investors. There's a specific criteria for that. Therefore, the SEC has taken a very proactive stance in challenging the ICOs and making sure they fit with the existing laws and regulations. In Europe, the approach isn't quite as proactive as that. Europe is monitoring, certainly the Authority for Financial Markets in Holland has intervened already in cases which they think are breaking existing laws. But the ESMA and the AFM are issuing, essentially the behavioural regulators, they're issuing warnings around ICOs, but they haven't yet got the regulatory framework to the level where they're stating how that will be applied. There is an action plan set out which is looking at the FinTech laboratory, looking at some cyber security issues, looking at the regulatory sandbox approach, and some crowdfunding regulation. The last area which I want to focus attention on is data science. We see a couple of triggers for action here which I think are very worth following. The Facebook Cambridge Analytics issue. That raised issues not just around data theft, but what was done with that data, particularly look at the OCEAN, O-C-E-A-N, methodology applied by Cambridge Analytica and used in election campaigns. Is that mass market individual psychological manipulation, and how does that impact our democratic election processes? That has raised attention in the politics here. It could be a trigger to have further intervention. The further one is there have been some fatal accidents with self-driving vehicles, and when people get killed, that's also a trigger for political action. So we'll see some action in this space. We already see in America some bills have been introduced around self-driving vehicles, the future of AI, trying to set out who's accountable for accidents and what framework applies. The European Commission has also taken some action here, looking at an activity for artificial intelligence and having some commission set up for that. And the industry has got some self-regulating bodies set up. These are emerging, and of course they have to review how effective these are. In Europe, the question raises, is GDPR the blueprint for how regulation in the data science and artificial intelligence space could take place? Perhaps. It's an interesting one to watch. But we certainly think with these triggers of some accidents, we think more regulation will take place in this area. I hope that's brought you up to speed. If there's any questions, do please reach out to us. This is Alex Dowdos from FinTech. Thank you.